There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Starting Sunday the 24th through the 29th, this is the last full week of October, moving into 2 months left and some quarterly expirations coming up. So just note that as far as this general calendar flow. Nothing on Monday, holiday tomorrow. Never understood why the Aussies and the New Zealand folks have holidays on a Sunday in terms of banks. Most banks are closed globally on Sunday. I guess maybe they're open in New Zealand. But in any case, the Tuesday, more of the consumer price index stuff. Just click on any of these folders if you want to see, where the forecasts are. It'd be interesting to see if the inflation is starting to hit these guys too. I mean, prices have gone up globally, so I can't imagine that any country that puts out solid and reputable numbers, which certainly is questionable among non-developed countries, will have inflation. So what else I want to say about that? So just keep an eye on that. All that stuff is just really, how it all plans out. But looking at Canadians, this is the big press conference. This is very similar to some of the Fed meetings, Humphrey Hawkins, and different types of central bank meetings that they have happen. So just be aware on Wednesday. Don't then I'd be trading really anything CAD related. Including NEO. So hopefully NEO is going to be shut off somewhere around these times, or just, don't accept any trades from it is a way you could sort of get around that. Do keep in mind that there is an ECB press conference on Thursday. This particular one, which I didn't take a close enough look at, let's see what we got. So it looks like it starts just our regular conference. You're always looking for Q&A in these types of conferences. All right, Friday, GDP and our core price index, which everybody will probably be taking just a little bit closer look at, looking for any of these concerns of inflation continuing to move into different areas. In all fairness, this meeting this Saturday, since I have covered these subjects so much, I'm just going to roll through the charts. I don't have any extra lessons since this is going to be a shorter call. What I would suggest, if you do have some time, go through some of my previous stuff. I think what I'm probably going to do is put out a separate, since we've got AP Live up and running, it's actually working quite well. I'm now subscribed to all of the groups. I've been given access to everything. So we've got a lot of communities that are starting to build in here, and guys can always go in and, answer messages and send DMs to whoever, including myself, on anything. But one thing I want everybody to give some thought to is we're going to be, I think, towards the middle of November. We have a studio that the owner, co-owner of First Down, along with myself, he owns KDS Studios in Orlando. So we have a podcast room. We're actually be down there shooting some videos for our new company. We're also going to be recording some podcasts. So We're going to be recording podcasts for not only the agency side of our firm, obviously our employees, but we've been asked to get podcasts listed with some of the financial podcast channels and or repositories out there. So I need some ideas on podcasts. I mean, obviously, these podcasts have to be even much more general in nature than what I go through in my weekly calls, right? They've got to be just big picture. So, I mean, one podcast can just be, which more than likely we're going to do in the beginning, is, the pitfalls of financial planning if it's done incorrectly, right? We can go through some of the high level stuff. But if you guys want to see anything, just post it in any of the news feeds, or you can respond to anything I'm posting as far as the podcast. Just keep the ideas of what you're looking for towards the big picture. We have a bunch of ideas for some different episodes, and we're not going to do one every week, which just takes up too much time. The studio is almost a half an hour away from where our office is, so it's not like we can all congregate there and get it all done. But I think it'd be really cool. Podcasts are very popular. The vast majority of the podcasts, at least in the financial sector I listen to, are generally pretty good, but they're just full of a lot of fluff and disclosures and stuff. And ours is really just going to sort of cut through the crap and get to what's most important, right? Like putting together a solidly diversified financial asset plan for one's life and spouse, I should say, right? Or trust, or whatever your goal is for charity. And then obviously getting the lowest risk, highest growth out of those assets on being diversified, right? But other than that, how to actually construct a portfolio like that just depends upon one's income level and one's assets. So, but there are a bazillion stories. In one of our podcasts, we're actually going to talk about some of the most successful traders we know and what it took to get there. And the vast majority of these traders, there's probably about 4 or 5 I run with that have made just some incredible money. They all started off with about 10 grand. So it's not like it's not doable, right? So shoot out some ideas if you can. Let me know. So I just had somebody post that Friday is the Sabbath. I don't have any religious stuff on the calendar here. So Friday and Saturday is the Sabbath. For those that follow that stuff, let's go into the charts. By the way, all these news feeds are getting more active. I mean, Brian White's been a champ at posting here, but Fernando's putting out some good stuff, and you can follow along with what's going on here. And if you're going to post anything, put some trending hashtags on them. All right, markets as a whole, to the surprise of a lot of the bears. If I can get this bringing into the. Not going to go through any volume profile stuff this week, but I do of note to show this. So, previous high of the S&P, and this is the Spiders Index, which is the most liquid ETF on the planet in terms of trading volume. You can gauge this against the SPX, which is the actual index itself, or the SPY. It doesn't really matter in generally. But the point is that we came and corrected to the tune of not even 10%, and we came right back up to the highs, right? And I talked a lot about how the sort of juxtapositioning that typically takes place in October as institutions are adjusting portfolios, you typically see a correction in a greater trend up. But this was interesting on Friday. So Doji candle prints, we made a new high, and arguably we'd made a new high the day before. You could probably see with these candles with the dotted line. But we came up and made a new high, and then we finished below the previous day's low. So it's typically not a good thing as far as continuing to maintain the rally, right? So whereas when we gapped up a bunch, and there was a whole bunch of reasons for this, obviously the earnings coming in good, no surprise. We had a couple of days in a row where we had one time framing movement. I usually will not step in front of something like this until it levels out, and starts to trade sideways. And this is for almost anything that I trade on any time frame. If there's just a tremendous push up or down, as you're going to see with some successive grouping of candles, if it puts together typically more than 2 or 3 days of what's called one time framing up or down, I will usually not step from a long-term perspective on a daily chart. I'm not going to step in front of that trend. So I would have been best buying pullbacks if you truly want to be on the ride up, right? But I wouldn't be shorting any of these highs until I see stuff like I saw on Friday. So for those going after the US 30, which I'm not a fan of, I don't talk much about because I'm trying to get everybody migrated over to the SP, or the Qs, which did not make a new high. Now, there's been a lot of other headwinds as to probably reasons why tech didn't make a new high as far as broad tech, right? So the Qs is essentially the top 100 companies, and this is the ETF that somewhat matches, not as direct to the NASDAQ composite, whereas the spiders is a direct connection from an ETF perspective to the index itself, okay? But of note is the fact that tech has not made a new high. Doesn't necessarily mean the whole market's going to roll over. It's just, it's interesting from an observation standpoint. So if I was someone taking any trades with an automated EA or some form of I need to approve the trades EA on anything that's not a currency, it's more of an index based, something on the DAX or the stock 600. None of these indexes have made new highs, right? UK has, and it's pulled back, right? FTSE 100, but the NASDAQ isn't. We may have, an artificial new high, is what I tend to call it, because it's almost like a head fake, right? Sucks in just enough folks to load the boat to one side before it tips. So you always want to be aware of that. I'd be much more interested in playing the downside if continued weakness plays out, because if we can't make a new high and continue higher, at least for the S&P, this isn't the best representation. I guess I can go like this, but if we can't make a new high, the argument is we go back down to the bottom of the range, in which case I absolutely would want to be short as we roll back down to test those areas out. Now, there's a whole bunch of other market profile and volume stuff that comes in and plays, but essentially this generally is the bottom of the value area of this entire move up into this area. So you want to be real cognizant of how much support there really is at this 4,300 area. Let's go to the dollar. Look at the big picture, which I always try and do. Let's actually take a look at weekly first. So just looking at where we were in the range, really only matters where we were when we broke up into the range, right? So we spent an inordinate amount of time, broke through that obviously during the pandemic, and now this whole area around 95.50 has just become an absolute ceiling for us to have difficulty getting past. We put a doji week in, and now we've had 2 weeks of movement down, but not by much. Okay, so it seems like we're in a real tight range that very possible, given the right conditions and a whole bunch of other stuff, interest rates, all that. I think we're probably going to go up and test this zone. This is an air pocket right up here, because there just really hasn't been much volume traded in, actually more like this whole 95.50-ish area, all the way down to 94.50. This whole, it's almost a perfect dollar, actually. I mean, there has been some trading in there, but not much in terms of volume recently. It was a while back. It's way back in 19, which may or may not have that effect. But a lot of times when you hit these air pockets, we'll run to the end of the pocket and test that 95.5. So, and a lot of folks will be like, hey, we completely broke out and we're above 94.5-ish on the dollar. We're going to run up higher, right? Where in all essence, you really can't say that until you've tested the other area of that, what they call low volume node. just because there wasn't a lot of volume executed in this area, have a tendency to traverse the entire range and test that upper end. So I wouldn't be surprised if we did that. And then we got completely halted and possibly turned around at 95.5. So just keep that in mind. Actually, let me go back to the daily, just see if there's anything I'm missing. I've talked about this stuff just exhaustively over the last few weeks. Yeah, so support right here, 93.50-ish. We're just essentially in a $1 consolidation range, if you will, or balance area. Euro USD is the opposite of this, obviously. It was the edge of the cliff down here at this one spot, 1520-ish, 1500-ish area. This is the edge of the cliff. So if we get below this, there's no way I would be accepting any trades long under this area. I don't care how many came at me. It's the first time we've gotten under this, and it's going to exhibit more than likely the same pocket all the way down to this 114.5-ish area, probably pretty quick. Could flash test the whole area, in which case may wind up trading just back inside its zone, which does nothing more than confirm that we need to spend more time trading in that, or essentially under that 93.5 area, and under the, I should say above the 93.5 area in the dollar, under 94.5 as far as the zone range. GBP daily, same thing. Notice how we've been stepping down slightly in our range, stepping even a little bit lower. But again, this is that sort of dollar rally thing here. We've tested. This has actually done considerably better of recent related to the dollar. USD Cad, I think we may see some movement out of this a little later this week when the Canadian Central Bank comes out with their stuff. Could be wrong. USD JPY. I don't know if you remember, I had talked about some of these touches up here on this daily chart of the extreme outs of these Bollinger Bands, which have gotten quite stretched, and that more than likely we're going to see some snapback, which we have seen. So one of the few times if things settle out and there's a couple of dojis and you're up near some of these highs, especially on higher time frames, certainly daily, weekly, even monthly, it is a more successful trade typically to step in front of that train once things have somewhat cooled out, which is kind of what we're seeing here. So for now, looks to me we'll probably get either an orange or red line print in this 114 spot 50-ish area. Let's go down and take a look at the GBP and ZD just so you guys can see daily. Still holding the bottom of that range. Aud Cad, same thing, still inside the range, except in trades both ways if you're trading it. Gbp Cad, here's the Neo currency here, broke this pretty hard. And notice another great example, I think I probably mentioned before in previous calls, but when you break a big zone of support, you come up against and you have a number of big wicks, where the body of the trading finishes lower, and that usually tells you that it's going to take another step lower. So best is them accepting trades from some type of pattern that sets up like this, right? They've been much more profitable than trying to find or fight the buys at the bottom. Notice you look at this stuff enough, it becomes just habit that you see these patterns and how they play out. This isn't rocket science, it really is. It's just understanding price action. Keep in mind, for some of the new people just joined, we're going to be doing a podcast. I need some ideas for doing podcasts, what kind of everybody wants to see, just from a high level perspective. Not going to get in, you can't really get into showing lots of charts on a podcast. You're just talking about broad concepts, starting related to financial planning, building wealth, right? Asset allocation, having diversification, all those concepts we're going to touch on, but we may drill down a little bit deeper into some numbers and concepts of lower taxation really is the key. If you take a look at some of the smartest, wealthy people around the planet, they pay very little tax. They use all the systems to their advantage. They maximize different investments in areas that are, in some cases, tax advantage or tax free. Take a look at gold. Now, on gold, we saw on this daily chart here a pretty big pop. And a lot of times I'll jump between, this is just the spot market here, but I'll jump between this and the dollar just to see if there's anything that pops up. See how the dollar had a tighter range day, but gold had a little bit more of a wild day. And I think part of that was related to the fact that the equity markets had a big sell-off on Fridays in the center part of the day. So I think we finally were breaking out of this fairly long consolidation in this lower step or lower area zone, and then we broke above it, and I think just the liquidation and equities probably pulled it back. But that tells me that they were at least up there. So maybe some of these gold bugs are going to finally try and rocket this thing up. It seems to me the next attraction level, depending on what the dollar does, will be 1900. Real strong support down here at this whole 1700 an ounce area, and then at the edge of the cliff is this 1600 area. So this whole 1700 an ounce area is very solid. Probably is quite viable in a pullback for a long-term perspective, for a certain smaller percentage of one's account allocations. Let's take a look at oil real quick. Continuing to make new highs. This looks like something that's just consolidating and wanting to go higher. That's what this pattern looks like. Fortunate for all of us, right? Get out your electric cars. Let's see what else. Oh, of note, look where the VIX is. So this tells me there's, nobody's concerned about anything. Now, right here was China, and as I have kept bringing up China, I said, hey, this is of note. This could be an issue, could be a ripple. So far, it's been a ripple. I also thought it could also be a tidal wave too. Doesn't mean it can't be at some point down the road. So don't lose any focus on what's going on in China. They're trying to cover that shit up. Take a look at coinage. So typically events that are what I like to call crescendo events, or events that bring in lots of press, right? So historically, it's been like the last 30 years, when equities were very much, not as much now, but when equities were very much the talk of the town, if you will, where they made the front cover of Time magazine. The year 2000 is a great example of this. Certainly in earlier in the 2000s was almost always a good time to sell stuff. Doesn't mean it's a good time to sell crypto now, right? I have proven that I have been less than stellar, let's just say, in reading this chart. It's a whole bunch of other exogenistic factors that just bring in variables that I can't seem to put together just looking at pure price action, right? So we sold off heavily. This was more of an understandable chart. We broke from that area, came up a little bit, tested down, right? And then this was sort of your buy range right here, right? But after that, all these movements, they've made no sense to me. So, take that for what you will. These sell-offs here, you think that would have really spooked a lot of folks that were buyers here and it'd be a further sell-off. But, these ETFs, and by the way, the front cover of, not the front cover, but the bottom of the front page of IBD's weekly newspaper that I get, it's only print edition of anything that I get newspaper related, has the big Bitcoin ETF at the bottom. So the guys at ProShares, which is actually a really good ETF company, they have a Bitcoin linked ETF now. It's called BITO. And, essentially it's just that, there was approval for a number of ETF related with underlying Bitcoin asset as an ETF, exchange traded fund. That may have been a crescendo event, right? People were buying the news and then selling the actual report itself, right? So just keep that in mind. If this area doesn't get tested again and have some sort of consolidation up around this sort of 64-ish a coin, I think we're going back down to test the range low. And I can't tell you would be a buy down here. Maybe it is, and I'm dead wrong, and the thing goes to 100K, right? I mean, obviously my read on this hasn't been that good, but there's just a whole bunch of other factors that exist in understanding this chart or how it acts that was never the case with an individual equity, bond, future, or generally a currency account, right? There's other factors at force that, and much of it is just the mania, right? I can't predict one level of mania to the next. So I would consider this to be of high risk only because I can't understand the direction of it, right? So if one's going to ride the train of this and you hopefully subscribe to some other type of risk management, which I highly encourage, other than holding on for dear life, which I find one of the stupidest statements ever. It just basically projects to the world that you're an idiot and you don't care if you lose all your money, you're just going to hold on, right? It's just not something I would ever want to recite to a friend that's in this business, because they look at me like, well, wait a minute, you're like the risk manager guy, right? So why on earth would you be talking about that? I'm not. I'm against it. I think you should completely excommunicate it from your vernacular, right? So that's my thoughts on the coinage. I thought always interesting is that until last week on this daily, a lot of the other currencies hadn't made any highs. This looks like a sell at the high to me because it pulled back. A lot of candles at the top. And I'm not going to, this one isn't anywhere near a new high. I'm not going to, I don't go through a lot of these currencies. But, if all of them are making new highs at the same time, you have a whole wave versus just one pushing itself out there. So it reminds me a lot of maybe not the best comparison in terms of business models, but this reminds me a lot in terms of just 800-pound gorilla on the block to when Microsoft went public in the late 80s, was just storming ahead of all other software companies. They were killing Apple and all that at the time. They're beating up Microsoft, and everything that was related to software was all directed around by generally what was going on with Microsoft and Adobe, right? A couple other smaller players like NVIDIA at the time and some of the computer box makers, right? They somewhat direct around. But I mean, Microsoft and Intel pretty much led the entire tech market for nearly 15 years. And then the competition caught up. And when one wasn't making a new hire, the whole group as a whole, computer box makers, software, separate categories as far as SIC codes, there was always some tea leaves to read in that, right? So that's kind of what I was talking about, just this thing, making new highs and then pulling back. Wouldn't be surprised for this to test this zone here first. It's 53-ish, about 10,000 a coin lower. This zone next here, 37.3-ish, all the way up to this. Essentially, you're probably about a $3,000 a coin zone. Ultimately, the support lies right under 30,000 a coin. What else? Let's take a look at bonds real quick. I prefer to use the IEF and the TLT. These are two of the most traded, 7 to 10 year. We are back in the zone that we were in towards the end of Q1, beginning of Q2 of 21. So we've come a long way down, right? Remember, bonds inverse relationship, price goes down, yield goes up, right? So, those buying into a bond fund somewhere in this area, right? You're paying, or this particular ETF paying 118 a share, you've lost money, obviously, even though you're getting your interest payments, still going down. So as I often talk to clients about that have a whole bunch of super expensive bond funds in their portfolios and we take them over, we're just not fans of fixed income in this type of ownership structure, right? Just not getting you any return. Now, if you had shorted TLT at 120 and uh, bought back to cover at 113, essentially made yourself 7 points. I mean, it is a tradable unit. But in terms of a buy and hold type client just looking for some more conservative diversification in the portfolio, there's better ways to get that diversification than owning something that's paying you, 0.5 to 1.5%, all the way out to, in some cases, 30 years, right? But of note, at least on the daily, the 20 years, the longer term TLT, this is the more traded of the ETFs. We're back towards the bottom of the previous range. So it'd be interesting to see if we can get in or not. We'll probably trade somewhere in this range if we break into it. The bottom being somewhere in the area of 134. I used to trade a lot of bond futures. I don't now. But it is an exceptionally liquid market to trade. So just keep a note on that. This is going to affect the dollar. Obviously, I probably have this a little more in focus in some of my weekly calls because you don't really want to be getting down into these lower areas here. That's that's a problem. And much of this recently is a factor of, typically from a risk standpoint, money pours out of credit markets, right? Out of the bond markets generally and into equities when they're doing better. Subsequently, the reverse taking place when equities are doing poor. All right, so I think that's everything I want to say on so I'll post the notes probably a little bit later today. I gotta take off and take care of something. I'll post the notes a little later today. But that's about it, guys. Buddy, thank you for joining. I am the man that occasionally drones on and on and on. My name is Steve Federer. I run the call a little bit after 10 a.m. Pacific time on Saturday and Tuesdays. Looking forward to having everybody continue to join me. Have a safe weekend. May the trades be with you.